I think there's a lot of continuity. He has clearly been very frustrated for some period of time with the Federal Reserve and their wait and see mode while they wait to see how tariffs are going to affect inflation and the economy. And, he's very impatient to see rates come down. So I saw those comments today as being certainly in that same spirit, although, of course, the rumors early in the day had more urgency to them. Of course, subsequent to that, he seems to have pulled back those comments, and that's a good thing. I think it would be extremely bad for the United States to have a big rupture in the institutional independence of the Federal Reserve, which is what that would amount to.
Exactly. So how do you think this will affect the Fed's credibility in controlling inflation? And more broadly, how will this political move really just affect inflation expectations? We saw markets react earlier. There was really a huge whiplash from the equity market to the fixed income market.
Absolutely. So if the President of the United States were to go ahead and actually make an effort to remove the chair of the Federal Reserve, that would fly in the face of decades of institutional convention that puts the Federal Reserve in an independent position to pursue the control of inflation as well as keeping labor markets strong. And I think it would really raise important questions in the minds of investors in the United States and around the world as to whether the institutional environment that really underpins the value of Treasury securities, the strength of the dollar, and the expectation that inflation will remain low and stable in the United States, all of those things, I think, would be thrown into question. And that should lead investors to demand more to hold long-term Treasury. So that should lead to the long end of the curve going up.
Whenever the Fed chair gives a press conference, he's asked by journalists about the criticism that the president has made or is making about him. You've worked with Jay Powell for years. You know him. In your view, how does he feel about being this punching bag?
So I don't know how he feels personally, but I know that anybody in that position would feel that they have an important institutional responsibility, that he was confirmed by the U.S. Senate, that there is a legal set of expectations regarding the Federal Reserve Chair's role. And of course, monetary policy is set by a committee. It's not set by the chair alone. And so it is the Federal Open Markets Committee that has continue to hold on rates. So it's a much broader institutional environment, and personalizing it by this relentless focus on the chair, I think, is extremely problematic. Again, bad for the United States and ultimately defeats the purpose that I think the president is trying to achieve, which is to see rates go down sustainably in an environment of growth and low inflation.
When you look at the history of political pressure exerted upon the Fed, how do you make sense of today? I'm thinking Nixon, Arthur Burns. Is today worse? Is today different? Or are they more or less the same?
So I think that the past episodes where we've seen a lot of pressure on the Federal Reserve Chair to lower interest rates for political reasons have ended extremely badly. And we've seen in those episodes high inflation, and the Fed has really struggled to bring inflation back down. So I think this is a kind of similar set of pressures to what some Fed chairs have felt in the past, but not in the recent past. I think in the, during the period that we have seen low and stable, what they call the great moderation, low and stable inflation, there has been a real understanding that the president, the administration should allow the Federal Reserve to conduct monetary policy in a way that establishes their credibility on inflation control. So this is a big change relative to the last 3 decades, and it's highly problematic. You know, the president has said very explicitly that he wants to see the Federal Reserve lower rates because every percentage point that rates come down, this is what he says, it will save him $300 billion in interest payments on the national debt. And of course, that's more important than ever now that we've just added through the mega law another $4 trillion to the national debt. And so when you hear the president talking about this, he really seems to be very focused on those interest payments. And that is exactly the kind of institutional environment that would undermine the credibility of the Federal Reserve in fighting inflation and could actually lead investors to demand higher interest rates on long-term treasuries.
That's the great irony in this whole situation here. We have 20 seconds left. I just want you to make a prediction. Do you think Fed Chair Jay Powell will fulfill his term as the chairman of the Federal Reserve until May of next year?
I certainly hope so. And yes, I do.